to turn to Michael McKee, our international economics and policy correspondent, who has been, yes, listening in as the president and his team have been speaking, but also paying very close attention to the 30-year bond auction that we saw just a moment ago, and also the undulations that we have seen and continue to see in the markets, both in the bond market and the stock market, and to the economic data that we got as well, the CPI data this morning. Mike, I just want to get your reaction to what you heard there, and maybe give us your sense of sort of what these next 90 days look like. Here we have an administration eager to broker deals, as we heard there in that meeting. That's meeting with the realism of how difficult it is to broker trade deals historically, all the nuances and details that go into them.
Well, it took a year, more than a year, to renegotiate NAFTA, and almost nothing was changed in that treaty that came out as the USMCA. So I think you have to approach what this administration is saying about these deals with a great deal of skepticism. For example, we heard there, and we've heard from others in the administration, that 70 countries have approached the administration. But Kevin Hassett said this morning on one of the other networks that there are 20 countries. So, I mean, what is the actual truth, and what are we actually going to get out of it, and how much of this is going to be tariff reduction, and how much of this would have anything to do with non-tariff barriers? I mean, remember, they went after the Europeans and the British for having a VAT tax. Does that get addressed? Yep. So a lot of reasons to be skeptical about what they're talking about. But what we can say will happen is if these other tariffs that are already in place stay in place, we will see prices go up, and we will see the economy slow down. It's going to be very interesting. These are very heavily weighted, obviously, towards China, and we import a lot of stuff from China. So how is that going to affect the American consumer's psyche if they can't get things from China?
Well, and investor psyche as well. After the remarkable gains of yesterday, the best day since 2008, obviously we have a massive reversal on our hands with 5% losses on both the S&P 500 and even greater for the NASDAQ 100. And we know markets did play a role in the decision-making of President Trump yesterday, though he was specifically concerned about the bond market, talking about queasiness, Mike. And I wonder if a little bit of that queasiness has been abated, not just by the tariff moves, by once again, for a long duration Treasury auction, the 30-year yield, it looks like demand was a bit better than expected. Yeah,
the 30-year comes in reasonably strong. It stops through 2.7 basis points, about what we saw with the 10-year yesterday. It does suggest that people are out there looking for duration. Dealers took less. Directs, though, took a lot more than they did yesterday. Direct bidders and indirects were down a little bit from their average, but still relatively strong. So not a major change in the auction statistics, but a well-received auction in this case, as was the 10. So that may supply a little more confidence to people in the fixed income markets about foreign demand and overall demand for U.S. Treasuries. There's been some talk that people were backing away from investing in the U.S. I think the equity markets are reflecting what normally happens in these kinds of situations where you have a big turn down. This is what we've seen before, where you get these rallies and then stocks go back down again. Very much the pattern after 2008, after Lehman Brothers. So you just have to wait and see how long that takes to play out and where people start to find value again. And it may be hard to do in the sense that people can't trust exactly when all this tariff news is going to stop and we'll have what there is.